Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, August 1, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? It was a take him out behind the woodshed and shoot him 3 times type of day. Let's get into the action. Let's start with the obvious, not to be Captain Obvious, but there's a method to the madness. So I want to point a couple of things out. We'll kill 2 birds with 1 stone. Now, if I were to put a fib retracement tool from the recent high, and this is an approximate, it's not to the penny, it's close enough. You'll see what I'm going in a second. To the recent low, you'll notice that the market came to around the 618 retracement this morning. This was the unfinished business, and right here is 554. On this chart, it says 74. The unfinished business was right around there, and that's within pennies, if you had these on the nuts, to the 618 retracement from recent high to recent low. Now you flip over to inside the numbers, you go to before the opening bell. What were we looking at? What was the market doing? Where was it headed? And what was likely to happen after it got to the place that it was trying to reach? Now, didn't necessarily think that it was going to collapse back down all day long. Just we're talking about from a trading perspective, a first time, best time scalp with potential. 554.80, give or take, up to the next number I had, which creates a zone. Give or take is a resistance zone and a short scalp with potential. Now, here was the unfinished business. This was the gap that was left open, 553.78. They came up short yesterday. The high was 553.50. Now, what I tell my traders in the morning in the live room is, hey, look, that's a gap, and they can react off the gap. And by the way, that's also written in the notes, inside the numbers, in the commentary. They can react off the gap, but I like a little bit higher. I'm looking for the next thing I can find over the gap. I'm looking where people aren't looking. 554.80 was that place above the gap, give or take, that I was looking for a pullback from. You could see here, 553.72, that was the unfinished business. So this was our 553.80 up here, and this is what it looks like on a 15-minute chart all day long. Pretty incredible decline. Nobody thought that was going to happen. I didn't think that was going to happen. We know that these things happen. It's just that's not in the trade plan at 9:30 in the morning. This is why we take a profit, we put it in our pocket, and we hold trailers for as long as we can, as many trailers as we have. We had some serious money made in the live room today on the short side of the tape. You never know which ones are going to give you the rocket ride. Let's move on a little bit and let's talk about where we are, what to expect, where price could be going on the downside. Are they going to whip it right back up in the upward direction? We don't know. Let's talk about the whole picture. So here on the bull side, even though this candle is nothing close to bullish, on the bull side, we have a higher low. So we have a low, we have a higher low. That was on the 30th on Tuesday. And then today we have yet another higher low. The market, at least at face value, is trying to put in a higher low. Fair enough. We don't know that they will be able to, and we can gauge it very simply using the low from the 25th last Thursday. That's the line in the sand. You have the trend line. That's a line in the sand. That's all we need to know for now. Below the 25th, below that low is 537.45. Get below that low on closing basis, daily close. It's going to open the door for the zone that we talked about last week and already this week. Here it is. The first order of business would be 533.07. That is the most recent breakout area. Over here, it's this red candle on the left. The market ran up to there, pulled back, broke out above. That is the recent breakout area. That still counts. It's still an open item. They were supported so far on this move down by the trend line. What's another thing that's going on here? Well, this is one of these bearish, wedgish, channelish type of situations going on. After a move lower, this can produce another move in the downward direction to complete the bear case. We're still in the orb of looking for some kind of a low around the first week of August. Could have come in at the end of July, could still come in at the first week or so of August. That's certainly on the table. We're in the orb. We don't frankly know whether they're going to hold this low, crack this low, or make a new low. We have our beliefs, but we don't know which one is going to happen sitting here today. And by the way, let me just clarify something. The traders that were short today were from 554.80, not the gap. Just to reiterate and just to make sure we're clear, it was basically high of day. The high was 554.87 against 554.80. Just want to make sure we're on the same page over there. So on the south side, back to the daily chart, we're looking at 533.07 and to this zone. This is a little bit wide, but for discussion purposes on a daily chart, we have three particular numbers here. Intraday, things will get narrowed down some for inside the number members and live room members, of course. The bull case right now, they'd have to get back above today's high. Back above today's high would break the chain, and there's a lot of work to do to get back up there. Intraday, same thing. We can have bullish periods of time intraday where markets are rallying, and inside the number members will have those numbers at their disposal, of course. However, not tomorrow. Service announcement inside the numbers is closed on Friday, August 2. That's tomorrow. The live room will be moderated by Jordan. Weekly close will be very important. Do they close the week above or do they close the week below the trend line? Very, very important. We're jumping around a little bit today. What I want to do is just show you the rest of the notes so that you can pause the video, read the notes, and go back to the chart to double check the work if you so choose. I wanted to highlight the important thing where we nailed the actual high of day within about 7 cents. You'll see other numbers on the board which under normal garden variety conditions would be support for the market and have decent bounces, but frankly the market just went down all day long with very, very few bounces along the way. Pause the video, read the notes, go back to the chart, and double check the work. What's going on over in Camp IWM? Look at this collapse in IWM, down over 3% today, $7. Right into the 20-period moving average or home base. Funny how that works. Pretty heavy volume. This is institutional participation type volume. And in all fairness, this is what's called a rodeo. This high up here, the sell-off, a new high, and a one-day wonder down to the downside of over 3%. This is a rodeo. Markets tend to have rodeo-type activity right around the precipice, right before they have one of these really, really prolonged, protracted, larger moves. Write that down. Put it on a sticky note. Write that down too. Wasn't that the thumbnail from last night's video? Classic bull trap. What was today? We'll just issue that one a funny how that works. What about the transports? The folks down at the transportation department, Buttigieg's crew, right back inside the channel, right back inside this important trend line. Look at the weekly chart. Where are they going to close the week? Back inside or above? We'll find out tomorrow's close. Interesting information. Transports got hit for 1.7% today, 270 points. Do you think the market knows about these trend lines? I do. You can look at it a lot simpler on the monthly chart and say, look, if they get to the precipice, time will be up. They will either break to the upside or to the downside. They do not have to wait until they get to the precipice. They can break out or break down at any point before the precipice. But when time is up, time is up. What about the Q people today? Down $11, 2.5%, rounding. Very simple here. You have these lows. You don't have higher lows. You just have a set of lows riding the 100 period moving average. So we'll use that as a guideline and say, hey, look, crack below this stuff that's been supportive of the market thus far, and you have one of two things. You either have a spike the low and rip it back up in the other direction. I would have a number for that one. Or you have another leg down. The spike the low and rip it back up in the other direction isn't that far away, so we'll know pretty soon whether or not this is another leg down. What is that number, you ask? Good question. A little tiny zone here, 451.75 down to 450.20, much below 450. We'll call it a semi-fat round number. That will open the door for another protracted leg lower. Write that stuff down, put them on a sticky. XLF cracked a little bit today, but they're above all the moving averages. They're still above the last breakout area, that is 42.50. At face value, we'll just say she's still in an uptrend and the trend is your friend. Can she come back toward the weekly home base place? Absolutely. Does that damage the longer-term uptrend? No. Will it look ugly in the short term on the daily chart? Absolutely. And that's where traders have a disconnect between what the long view is and what the shorter-term view is. You have to be able to marry the two and have an understanding of where they are on each particular chart. Look, the 20-period moving average on the weekly chart is down here right around 41.70, right a little bit lower than that. That's fine. Where's 41.70? Well, it's all the way down here. If they were down here anytime soon, we would think that this is rolling over from a daily chart perspective. But they may, and here comes some light bulbs, they may be poised to put in a higher low in that general area. You see how this works? I'm not guaranteeing that's going to take place. I'm just saying this is how the charts unfold when you have to look at daily, weekly, monthly, intraday, 240, 120, 180. Look at a multitude of different charts to get the picture that you need to uncover what the puzzle picture is. Different picture over here in Smashmouth. They got absolutely obliterated today, down 6.5%, $16. They did make a new low. They didn't close at a new low, but they made a new low today. This is generally a pretty good proxy for the tech space. You had a nice trap set up yesterday with an up day and then a thrashing to the downside today. Has to be bunches of pies in the face around the semi-space today. Not just in the SMH, but it has to be across the board. NVIDIA, SMCI, you name it, all that stuff. 223.75 is the next target on the downside should they crack the low. The only thing that's going to be at least a first hint that they're breaking the chain and going to try and rally a little bit is get back above the 100 period moving average. But you can see what's going on here. Riding it, breaking it. 223.75 is my next target. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.